So my last video, I was just talking about the retail apocalypse, basically. And I thought to myself, I'm going to type in retail apocalypse into Google. About 737,000 results in 0.81 seconds, it says. 737,000 results for the phrase retail space apocalypse. Retail apocalypse. Who would have thought so many people would be talking about this? If it's a non-issue, why would people talk about it? Why would you use that word, retail apocalypse, unless there are signs of it and people are starting to talk about it? I'm going to suspect that as the days, weeks, months go by, Google's 737,000 results are going to creep up, 800,000, a million, etc., because a retail apocalypse is in fact happening. So the other two things I said at my last video I want to talk about, article from Zero Hedge, Snap, remember Snapchat? Ridiculous. Enters correction, plunges 16% from post IPO highs. And then we have from dollarcollapse.com, the second dumbest kind of money is pouring into stocks and with a vengeance. So I mentioned just briefly the other day about Snapchat. Oh, it's a little chat, phone chat, chat app. Oh, another chat app, just what we need. If I had a silver coin for each chat app I could get on in my hands right now, boy, I'd have a small fortune. And I said it, you take a little picture or whatever, you can write text on there or a little smiley face. You send it to your people, and then they read it, look at it, and then it, poof, it's gone. Gone forever. Ooh. You could use Facebook, you could use Twitter. What the hell is the money? I'm about to say MoneyGram, Instagram. I mean, there's all these photo, Snapchat. We're gonna IPO. We're $30-something billion. What planet am I living on? What freaking planet am I living on? We're starting with this one from Zero Hedge. Snapchat enters correction, plunges 16% from the post-IPO highs. He says, with millennials piling in and barons bashing it, Snap Inc.'s shares have plunged this morning after opening up over 4%. The stock is now down 14%. And this is from earlier this morning, which was yesterday morning. From its spike highs on Friday, and volume is heavy as spec longs cover into shorts, T+3 borrow availability tomorrow. As we noted previously, the median age, matter of fact, let me just, because I'm seeing this chart here, let me, Snapchat stock price. Just curious, Oh, it's down 12.6%. That's the 1 day from 5 days. What do we got? There's the peak. Is that Friday, March 3rd? I think that was the 3rd, right? March 3rd was Friday. All-time high, 28.84. Down to 23.79. But currently, today, and this is after hours, down 12.6%. Oh, ouch, baby. Very ouch. Where was I? As we previously noted, the median age among Snap buyers on Thursday was even younger at 26 years old. About to say percent, 26 years old. That happens to be the same age as Snap co-founder and newly minted billionaire Evan Spiegel. Rebecca Schoenthal, a 22-year-old journalism student at the University of North Carolina at Chapel Hill, was among them. She said she bought 4 shares of Snapchat for about $24 each. She put in an order for them on Wednesday night, stipulating that she would pay as much as $40 per share. Quote, I wanted to test the waters and play around with some money. I wouldn't be too devastated to lose, she said. Well, that's good. You didn't go all in. That's a plus. For a super millennial, yeah, good move. I think I'm going to stick it out for at least a few years. Miss Schoenthal, who uses Snapchat every day, said this was her first big stock pick. She's gotten interested in stocks this semester because of classes she's taking on personal finance, and branding. She thinks the prospects for Snap are bright, particularly given that Snapchat is changing the way many young people, including her friends, read the news. There was also outsized attention from younger users on StockTwits, a popular social media platform used for sharing trading ideas. About 40% of users are between the ages of 18 and 34, but 60% of those following or viewing the stream of messages about Snap fell within that age range, the company said. Kalina Markley, a 29-year-old wellness consultant who lives in San Fran, bought $100 worth of shares on Thursday using a company that offers gift cards for stocks called Stockpile. I have high hopes for Snap, Ms. Markley said. I think they are doing really cool things. She doesn't do much investing generally, citing... this is great. She doesn't do much investing generally, citing student loans and the high cost of living in the Bay Area, but got excited by the talk of the IPO. One promising sign of the company's growth prospects, she said, even her parents are using it now. Some disappointed millennials this morning, and he shows a chart. At the low, it was down 16%. Not worth $40 billion anymore, says Zero Hedge. Barron's bashed the stock over the weekend following Pivotal's initial sell rating, and Needham analyst Laura Martin writes in a note today that Snap is a lottery-like stock, and while lottery tickets sometimes pay off, risks for Snap include a total addressable market that's 80% smaller than Facebook's and no clear path to profitability before the year 2020. What? But the CEO's a billionaire now. Interesting. Rates new underperform with share value of $19 to $23. Says share price should decline based on Facebook and Google EV/sales ratios. Other negatives include competitors replicating Snap's best ideas and margin trajectory. Oh. What are the best kind of people to get into your market? The young. Most young, they're not even thinking about researching. They don't know about finding alternative media like we do to get the real, juice. They're young, and they can't blame them for it. You can't argue with a 16-year-old that they can't drive their car very well. They just start driving, right? They just started getting out in the world and finding things out. And they have this belief that the markets are the markets, and all I know is I keep hearing every day I turn the radio on, the markets are going up. I need to get on this. What did Lindsey Williams tell you? When the markets go up after 08 and 09, they'll keep going, and they'll go higher, and they're going to go higher, and you'll say they can't go higher. It's going to go higher after that. You're going to say there's no way it'll go higher than where it's at now. It's crazy high. It's going to go higher than that. And he said when he asked why, he was told, we want to get every last sucker back into this market before we pull the rug out. Everything is so overpriced. As I've said a million times now, it is out of control. Snapchat. Who would have thought? Here I'm doing these YouTube videos. Joe, you're a programmer, developer. You could even hire the Indians. Come up with an idea. Like Snapchat. I can't even come up with the ideas because they're ridiculous. I can't. Another chatting app. Oh, we don't have enough choices already. We have 470 ice cream flavors. Oh, I've got a brilliant idea. I'm going to become a billionaire. I've got a 471st flavors coming out. And there's about 20 other flavors that are almost identical. I mean, what is this? Anyways, on to this other one from dollarcollapse.com, which goes hand in hand with this, which is why I'm doing it now. The second dumbest kind of money is pouring into stocks, and with a vengeance. One of the traditional signs of market tops is individual investors finally succumbing to the lure of apparently easy money and pouring their savings into the stock market. In the past, this dumb money flowed into equity mutual funds in general. But today, it's favoring exchange-traded funds that, rather than trying to pick winners, simply offer exposure to sectors or broad market indexes, right? ETFs race to fastest yearly start ever based on inflows. Wall Street Journal. Investors poured $62.9 billion into exchange-traded funds in February, pushing the year-to-date worldwide tally to $124 billion. The fastest start of any year in the history of the ETF industry, according to data from BlackRock Inc. Why would it be the best ever year-to-date? Because it's the biggest, most powerful bubble. Again, I think, I could be wrong. Let me say it. Let me get close to my mic. I could be wrong. But I really feel like maybe a little later this year, it's time for the club to let loose. So why not, if you're the club and you know it's coming and the end's coming with the markets, you want to squeeze every last bit of profit out of your system, right? I mean, wouldn't you? Would you not? Look, the end's coming. Let's just ride this horse till it dies. And as we get closer to the end, we're going to really ride it hard. And funny enough, that's usually how all these other stock markets bubbles burst in the past. Turn on the news, everything's great, and then literally a week later, bloodbath. It's like, everything's fine. Oh, comet just hit, destroyed Earth. What the? We didn't even see it? Well, everybody said, NASA said everything was fine. U.S. ETFs accounted for $44 billion of that, of the $124 billion, pushing assets in U.S. funds to almost $2.8 trillion. Most of the money went to cheap index tracking ETFs, a sign that the price war in ETFs isn't over yet. BlackRock's iShares ETFs were the biggest winners. Really? Isn't that the SLV stuff? iShares, SLV? They have a few. Were the biggest winner, and its low-cost core series garnered the bulk of the $38 billion global haul. Yeah, I don't think it was iShares Silver. It's not happening. Something else. Quote, all the money is going into the cheapest and most boring ETFs. This is the retail investor getting back into the market with a vengeance, said Dave Nedig, chief executive of ETF.com, an industry website owned by BATS Global Markets, newly a subsidiary of CBOE Holdings, Inc. Okay, more information I need to know at the moment. The rise of the do-nothing investor, passive mutual funds are growing rapidly, pushing aside stock pickers and changing the investment world. The fastest growing ETF so far this year is the iShares Core Emerging Markets Core Emerging Markets ETF, which took in $4.2 billion in the first 2 months of the year, 18% of its assets, according to FactSet. 3 other core ETFs that invest in U.S. stocks were also among the top gainers last month. Fastest growing ETF is the Core Emerging Markets. I don't know if that's going to end well. Why is this a sign of a market top? Because small investors tend to trade on emotion rather than logic and expertise. It takes them a long time to forget the pain of the last bear market, so they avoid the early stages of recoveries. When they finally conclude that there's money to be made, it's usually too late. And why are individual investors only the second dumbest money? Because governments are even less astute and more emotional than individuals. And their plunge into equities is just beginning. Japan's central bank is now one of the market's biggest investors, while the Swiss National Bank is a huge holder of blue chips like Apple and Microsoft. And he says, see this article he has, we're all hedge funds now, part 4, central banks become world's biggest stock speculators. In the next downturn, which, based on most valuation measures, seems imminent, the U.S. Fed and European Central Bank will find that interest rates are too low for big further cuts, while the supply of bonds is insufficient for big new QE or quantitative easing programs. So they'll join Japan and Switzerland in buying stocks. They'll do so indiscriminately, creating their own index ETFs and throwing money at a broad range of large cap stocks, possibly pushing prices to levels that history would consider insane. In other words, they'll act like retail investors on steroids. But that's a story for the next cycle. This time around, the fact that individuals pouring in is all we need to know. So again, title of it, the second dumbest kind of money is pouring into stocks with a vengeance. And I understand you could say, but if I did get back in the market even a couple years ago, man, I'd have had pretty damn good returns, man. I get it. I know. That's why I tell myself about Bitcoin when it was $2. Man, if I would killing myself. Even now, I told you the other day, but Big's weird, man. I just bought 1,289 something, whatever it was, Bitcoin. Plus the little fee for the exchange was like $1,300. But I knew Webbot was telling me it's 250 right now. It's about to go up to 408. But the Webbot's not always right, so I wanted to just feel that one out. Sure enough, spot on accurate. Whoa. Got my attention real quick. Even then, 408. It nailed it. Why didn't I buy at 400? What's 4 times 3? 12. I could have had 3 more Bitcoin had I done it then than I have now, at least from the purchase the other day I told you about, $1,300. I don't want to spend $1,300. I want to spend $400. Matter of fact, I'd love to spend 2. But again, most of us were late to the race. But I do see this stuff, and I understand it. And to me, thus, generally speaking, the stock market, it's way past late to the race as far as I'm concerned. However, if they drag this sucker on and pump this baby up to the end of the year and then let it go kaboom, that means we've got April, May, June, July, August of potentially insane, beyond insane, because it's already at an insane level now, gains. But I will remind you that Webbot did talk so many years ago that I was never even following the thing when he talked about it. 20,000 Dow Jones was in the data. Back when when the Dow Jones, I don't even know if it had passed 10,000 at the time. And it was attached to 20,000 and big stock market crash, etc. However, Cliff's other data has been saying that we may see 125,000 Dow, but it might be after the big giant crash occurs, and then super duper printing occurs from governments, and including our own, and potentially devaluations, which drives the next bubble into the Dow even higher. But it also does the same for gold, silver, and Bitcoin in an insane way. So those were some numbers coming out of the Webbot not that long ago. The 20,000 thing was many years ago, when people would have never thought we'd ever see 20,000 Dow. So anyways, I just want to share that with you. You want to get in that paper market, that's your business. I know you could make some money. People have. But after me witnessing what the club did in 2008, whenever they felt like it, just because they felt like it, I don't want to play their game. I don't want to play a game. It's like playing a card game with the dealer's the cheat. He's handing the cards to his buddies, or maybe he's got one buddy at the table. The guy keeps getting on pocket aces. Oh man, kings, pair. Oh, this guy's brutal. And you keep getting crap, but you think it's real, and everyone has a chance. And there's 5 of us, so there's statistics that say I should get some decent hands soon. And the card dealer gives me a decent hand, and I'm going to go in now. Yep. Bet, raise. And then this guy, he's got 3 aces. Oh. I don't want to play that game. But you might argue, but some of the players did make some money playing it. Yeah. Some people go to gamble at the casino in Vegas, and they walk away and they won. But that's usually the exception to the rule. Right now, though, glorious market, everybody's a winner. Step right up. We're at the circus. Step right up. Everyone's a winner. Everyone gets a stuffed animal. Everyone's a winner. What happens when you get at the end, though? And you might win a little, and then boom, it's gone. And my 401k is looking fantastic. It's looking fantastic. It is. And then it's crushed. And as it's being crushed, you're freaking out. Call my broker. Oh, sorry, your company, they don't have that plan with us that parks your money on the side in cash so you don't have to get affected by it. So we're going to try to we've moved it around a little bit to some lesser risky asset, but they're being tanked hard too right now. So Okay, well, why don't you take all of our money out and sit on the side for a while? Well, again, you don't have that plan with us. We can't do that. Okay, but you have my money in your possession. I'm demanding you to save me. I'm telling you this is happening now. Get out of it. Help me. I can't do that. Now, if you have a hardship, financial hardship, we could do that. We could pull it out right now. I'll take a 10% loss, but well, I'm working. No, I have a job. I can't. Oh, yeah. Maybe you change your plan with that. You know what I mean? Do you want to deal with that when it comes? Absolutely not. I'd rather have my fate in my own hands, which is why I invest in, you guessed it, silver. Take care.